You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates, and happy Thursday, September 3rd, 2020. I hope you guys are excited as I am because today is TRREB Stats Day, my favorite day of the month, and it's also going to be swarming all over the news. You're going to see all the big headlines today, including this one. Toronto housing market sets another all-time record as prices surge by 20%. So today, as you listen to the largest, fastest growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts, you're going to hear these things. Number one, what happened in August 2020 in Toronto real estate? Number two, where should I consider investing if I'm looking at maybe getting into rental properties? And asking the question, are new home sales increasing like resale properties, or are they kind of disconnected? And we're going to have a whole bunch of fun. Make sure you hit that subscribe button, hit that like button. You know me, I'm just here to have fun. And as an investor and as a broker in the GTA, I want to know what's going on, and we're going to continue to map it out. And you're getting the luxury of seeing what my research has to say that I'm bringing back to my high net worth investor clients. And before I get started, just to roll it back a little bit here, last night, we were woken up like 2 a.m. or the sound of my daughter crying. And it turns out we just recently put her in her own big girl bed. My daughter sleeps on a queen size bed. She's 2.5 years old, but she rolled out of bed. Somehow she managed to roll out of bed. So, well, it's no wonder, right? Like, she's got more rolls than a Costco grocery cart during COVID. And so we managed to pick her up, and now we're trying to figure out, this is really parent problems. And so we had a little bit of a rough night last night, but we're here, and I woke up to find out the Toronto real estate stats are out, they are in, and they are here on our podcast today because I jumped over all the news sources and I went straight to the TRREB publication. They had a news press release, and I wanted to go straight to that to tell you all the goods without cutting any corners or trying to convince you of any way or story. I want you guys to know what's going on in our local market as we continue to track various segments to figure out where is the best opportunity for my investment dollars. You guys ready? Okay, let's do it. Sales. So here's what they got to say. GTA Realtors reported 10,775 residential sales through the TRREB system in August 2020, which is up 40.3% compared to August 2009. So very significant year-over-year increases. Sales were also up year-over-year for all major home types, all types, both in the city of Toronto and the GTA. So we got sales up like crazy. It should be noted that low-rise market segments like the detached and the semi-detached homes and townhomes were the drivers of sales growth. Okay, and this is where we see this bit of a disconnect right now. Condominium apartment sales were up on an annual basis for the second straight month, but to a lesser degree. And they say this, quote, increased demand for ownership housing has been based on improving economic conditions in terms of monthly GDP growth and job creation and the continuation of very low borrowing costs. They're pointing to all the major factors that are going to continue to drive prices up and away. While new listings were up strongly for all home types, growth in new condo apartment listings far outstripped growth in other market segments. So listen to this when we talk about condos. This is a quote actually from the chief market analyst of TRREB, Jason Mercer. Generally speaking, market conditions remained very tight in the GTA resale market in August. Competition between buyers was especially strong for low-rise housing types, leading to robust annual rates of price growth. However, with growth in condominium apartment listings well outstripping condo sales growth, condo market conditions were comparatively more balanced, which was reflected in a slower pace of price growth in that segment. So I'm over here really waiting for a buying opportunity on the condo space, and I've got a lot of people really relying on what I have to say in my research to figure out what is the best time to get a condo. You guys know a few weeks back, we were talking about how condos from a price perspective annually had kind of they bottomed out. Really what we've been watching, and as you've been kind of listening to our podcast, is seasonal adjustments. Because naturally we're gonna have a seasonal adjustment. Yes, we got a lot of question marks, right? We got the deferrals, we got school happening, maybe a second wave, a lot of question marks. There've been question marks all year. This is nothing new, right? Nothing new here. But really the question that we're gonna kind of break down here is, are we expecting to see a normal, there's two options. Number one, are we going to see a normal seasonal fluctuation through the winter time? Right? So we're going to see prices come down into, October through December until February, and then they come back up roaring in March. Pick up where we left off, right? February and March. Or is this a different beast altogether where prices won't come down? And more, as I'm looking at these numbers, I'm thinking it's the latter. I'm thinking it's the second one. So we're going to get there in a second, but it's really up to you as an investor to make that call. And you need all the information you can get. So we're going to keep going. You ready? Price. The MLS Home Price Index Composite Benchmark was up 11.1% in August 2020 compared to August 2019. So we see the benchmark price being as a housing type. So as a housing type, we've seen price up 11%. If you take that out of the equation, the average selling price was up 20.1%. And this is really the bottom line number, is a 20% year over year average price increase, which is incredible. So maybe the composite benchmark is a more realistic approach because that factors in things like condos. Whereas the average price, if condo sales are down, which they are, and the low-rise units are selling higher and they're selling more frequently, naturally your average selling price will be higher, which is exactly what we see, right? And it's great for people, like a lot of people are expecting, seniors are going to retire, but all of this has sped up that cycle. It really has, right? There's grandmas out here celebrating, right? They didn't want it. You told her to downsize. She said she refused. She's like, no, I'm staying home. I ain't going in that nursing home. Don't make me. Now she's over here laughing like, see, I told you. And she's using her HELOC to put wheels on her rocking chair. She'd be rocking and rolling, homies. With demand for ownership housing continuing to recover, it will be important for policymakers to remain focused on the longer term goals. TRREB's mission continues to be, we need to deal with supply. And that's a good point, because as this thing accelerates, there is nothing holding us back. In fact, low interest rates are only encouraging it all the more. Inflation is only encouraging it all the more. In terms of inflation, as that happens, I'd rather be holding debt than holding an asset, holding a value. In fact, if you were to buy a property with cash right now, you're absolutely foolish, because what's going to happen to that debt that you're borrowing is it's just going to erode. The value is going to erode. That's a whole other conversation. But there's two things right now when I look at sales and average price that I notice. Number one, as I'm looking at the month over month, which is what I'm more interested in than the year over year. The year over year is going to naturally be higher because, let's face it, we might as well have just come through a spring market in 2020 next to a fall market of 2019. So here's the two things I noticed. Number one, the growth has decreased tremendously recently. So when I'm looking at the growth, let's look at the sales, okay? Just to put this into perspective, as we're talking about what was the top month, as I'm looking over the numbers, I would actually argue, I know I was saying it was probably July, but really it was more like June, because what we saw was a percentage increase month over month of activity in June of 84% in a month, right? Percentage increase in sales. In July, it was up 43%, and in August, it's up 10%. You see how that number is dropping? Not small, 80 to 43 to 10. Big drops in the last couple months as far as month over month sales activity, which is just kind of a rebalancing that's happening post COVID. But is price coming down? Well, no, the speed it's growing is coming down, because June seems to be the top. It was at 10%, whereas July was at 5.5%. And in August, lo and behold, up month over month, 2.6%. Still increasing, guys. Still increasing, but the speed at which it's increasing is dropping very, very quickly. I was actually expecting that we were going to see a decrease in the price, in this number of sales, but we didn't. Both numbers are actually up, which comes at a bit of a shock. Depending on where you look, you might find different numbers, which I think is where we're getting some of our listeners and all of this having other factors and from various sources. However, when we look at the overall sources now officially from TRREB, both those figures are up. Here's the second thing I noticed. If there was a chance to have a weak month, it was August, right? So this is looking to the future now. As I'm looking year over year, August really stood out as a month, a key month, because when we look from last year, it was actually quite strong last year. So naturally, we would think there'd be more if we were going to compare it, because the June and July figures from last year were not as strong. As we rounded into the winter months, it started to get a lot better. In August of 2019, it started getting better. So in light of year over year research, year over year stats, you would expect if there was a month things would drop off, it would have been in August. It would have been, but it wasn't, right? We still see this increase. We're still up so high. And the problem with this is this new idea that we've talked about in other videos, but that is really, I think, applies here to the GTA as a whole, is momentum. We have so much momentum, and so we're left with this question of the seasonality, right? September of 2019, if we're looking what's going to happen this month, it was actually up 1.4%, and prices never really went down in 2019 winter. So when we're thinking, okay, are we going to see, I'm going to bring it back to my question, just to reiterate here. Are we going to see the seasonal prices that we've seen in the past, in the history, or are we looking at a record-breaking year this winter, this season, that defies the laws of seasonality? Recognize that we saw this last year. We saw this in 2019 because when we look at the numbers, price never really went down in the winter of 2019. By December of 2019, we saw in that month alone, month over month, a 3.3% increase. So this year, to me, looks like it's on a tear as well. It could very much look like that, in which case the discounts that we might be waiting for as a seasonal adjustment because of the momentum we're experiencing this month, which was a key month, tells me there's a very real chance we could see prices at a minimum stay flat, more likely than not increase, especially when we consider all housing types. And maybe when we break it down, which we're going to do in a second, by housing type, recognize that we are maybe in an unusual year, much like 2019. February 2020, just to bring you back into perspective, in 2019, we saw an increase of sales activity by 15%. All that halted it was a little thing called COVID-19, if you guys remember when that happened. So that is really the only thing that interfered. Many of you know I am fascinated by condos. And so I want to know what's happening in the condo space, because I think these are the guys that got left behind. When we look at all the numbers, we're looking at sales, we're looking at average price. The one that gets smacked is condominiums. Condominiums have increased year over year. Yes, they have. They're increased in price in total for all the region of 9.5%. When we look at the 905, to break it down even further, they're up just under 13%, but the 416 is up under 9%. So the 416 specifically, within Toronto, the condo space has been hit the hardest. This and it has not fully recovered, because when we look at condo apartment sales, they are down. Here's the facts. They are down 50%. 50%, guys, year over year. And you'd think, oh, that's not a big deal, because if it was anything like the other housing segments, we would see listings going down at the same rate, right? It'd balance, it'd kind of catch it. You'd think there'd be a catch. Well, not yet. There's not yet, because new listings are down 22%. And so we've got listings coming on faster, not decreasing as quickly as the number of sales. And so that means we have a decreasing sales to new listings, and it's down 23%. Prices are up, by the way. They say in this snap, they have different charts here in TRREB, and one of the charts are saying they're up only 5%. But this decline, last year we saw a sales to new listing of 63%. This year it's 40%. So the sales relative to new listings is going down. So we've got a stockpile of listings happening, and until that can balance back out, I wouldn't be comfortable calling a bottom for condos. Does that mean prices are going to go down? Not necessarily. Not necessarily, because of this tear we're on from a seasonal perspective, but absolutely we have not reached a bottom as far as the increasing inventory for condos. Hopefully that all kind of makes sense. And when we look at who's been most impacted on the HPI metric, it's definitely the city of Toronto for condo apartments, which is in this map on the composite benchmark, 7.45%, where the rest of them are floating over 10, generally speaking, with that one exception. Actually, the next lowest is 11%. Even in the condo space, we're talking. Even in the condo space, it's Toronto condos that are being smacked. Not all the condos, Toronto condos. But that's the unknown, guys. That's the unknown. If you can predict these two things, you will be set apart from all other investors. Number one, are people going to come back to the city? And there is a huge argument on whether that's the case. I believe it is the case, but many don't. Many don't. The next factor is, will people want condos once again? And what does that timeline look like? And also, with that in mind, will we find that this winter will break the norm of seasonal trends? The prices could come down, which we saw in 2019. They did not. So it's not like it's unprecedented. We are in crazy town nowadays, guys. It's not like the summer of 92 those are good old days. My dad put me in a tire and rolled me down a hill. Oh, those were the good years. If I was in the market right now for a low rise, though, because we kind of dive deep into condos, if I was looking for a low rise, given my view, this is my perspective, I don't think we're going to see any large fluctuations this seasonal on the low rise. I just can't see it with this momentum. I wouldn't sit on the sidelines too long waiting for deep winter month discounts. I wouldn't. And that's totally up to you. Totally up to you guys on where you stand in your investment criteria. We've got vast views on this. Absolutely. Even in the news sources. Okay. So let's bring this all the way back. Those are some of the stats. And we're going to continue to digest those in the coming days as there's more facts and stats that are added to it that we can analyze, but we're going to leave it there. That's my quick view. Hopefully you learned a little bit about that. But let's talk about, for those of you who are investors, you're like, okay, I know what's going on. I see all the trends. Where should I, as a rental investor, a residential rental investor, put my money? Well, there was an article that came out from TorontoStories.com just yesterday, and it says these regions offer some of Ontario's most affordable real estate, and they point to various markets. And this comes from a report in RE/MAX, which obviously is biased, but if we're going to look for opportunities, what's not to say we can't look at an optimistic person for that or optimistic company for that. And they point to 6 notable regions across Ontario currently offering friendly average home prices than what you'll see in and around Toronto. The funny thing is you can say almost any city and really be laughing, but they highlight these 6 just to put it into perspective. If you can't, like, let's say you're currently struggling with affordability, like I can't afford $1.5 million home and I need a backyard. I want to have kids, right? Enough of this. And I can work from home. Okay. So these are the areas. This is what some of the ones that they're pointing out to in their order. Number 6, working your way down, is Barrie, which an average price of $570,000 and an income you would need, they say, is about $73,000, which is not unreasonable, right? Peterborough, number 5, average home price is $505,000. I know a ton of people that are so passionate about investing in Peterborough. It's going to continue to do great. Number 4, Niagara, with an average home price of just under $500,000. And I know we got some friends and listeners out in Windsor. Windsor comes on the list at number 3 with a home price of, listen to this, $383,000. So if you're going to buy a single family home, you could probably get a single family home, rent it out to one family, and still be breaking even or getting a positive cash flow. How wild is that? You can't hear of that in Toronto. It just doesn't exist. In fact, you need to put at least 40 to 50% down on a condo in order to break even. Number 2 on the list is Sudbury. We're going further out, but of course you're getting better deals, just under $300,000. And the furthest and number 1 on their list, North Bay. Do people live there? Their average home price apparently is $286,000. So depending on where you want to be, don't be afraid as an investor, especially when you factored in this idea. You've built in your vacancy rate calculations. You're factoring all this in. You're calculating for a property manager. You're allowing a budget for this. Don't feel like it needs to be behind you. It doesn't need to be in your street unless you're doing a laneway house, in which case it can be right behind you. But when we're going to invest here, the places you're going to get the most cash flow aren't necessarily in your backyard. Don't be afraid to go over the green belt. Be like the drum. The drum rolled down a hill. So according to RE/MAX, they go further into it. They say 75% of Canada's largest cities are undervalued. Here's a question for you. I love this. I love this concept. I heard this on a recent podcast talking about Tesla and how their prices are just so high. They're astronomically high. In fact, they're double that of Toyota, and yet they're such a small company when it comes to sales. It doesn't make sense. But the question is, much like, is Tesla too high, or is Toronto prices too high, or is it just the rest of the industry, the rest of Canada, too low? And that's up to you to decide. Is Toronto overpriced? Or is the rest of the country underpriced? According to RE/MAX, Toronto is fairly priced and the rest of the cities are undervalued. And that's up to you. What do you guys think? Maybe leave in the comments below. Do you think that maybe the rest of the country is getting a bad rap and over time it'll continue to come up? Or do you think Toronto is overvalued? I'm sure people have a lot to say about that. And then they kind of dive into some of these markets. One of the ones that I think is very interesting news from their list here was Windsor. I saw something about the Windsor-Detroit tunnel is preparing to reopen. Though the border remains closed, they're going to be reopening to the masses because obviously right now, September 21st is when their border crossing restrictions are set to expire. It'll be interesting to see if that all plays out or if it gets extended again. But in the meantime, they're opening this up between Ontario and Michigan to allow for this transfer of people when the time comes. And so don't be afraid, as some of our investors are, to get invested in areas outside the city. The city's average home price is expected. So here's, actually, I want to backtrack a little bit. Oh, that's talking about Windsor. Okay, let's move on. I want to share this idea into our next topic of people going further out. And just to kind of highlight what that looks like. Muskoka has been in the spotlight a lot lately, and I saw the TorontoStories.com article called Muskoka Waterfront Property Sales Set All-Time Record in July. What's happening here, guys, and the trend and why I think going outwards is not necessarily a bad long-term plan, even if everyone comes back to the city, mind you, because forget the fact that immigration is halted right now. Once that reopens, that's going to satisfy the need of the city. But in the meantime, that trend of going outwards is going to continue. People, they just want to sit back, just want to relax, maybe smoke a doobie. I don't always roll a joint, but when I do, it's my ankle. But when we look at the stats here in the waterfront community of Muskoka, they've taken these numbers from the Lakelands Association of Realtors. They showed 459 waterfront properties, which is up it nearly doubled, 96.2% in the same month last year. Unbelievable numbers, unbelievable. And when we see the non-waterfront properties are up just under 30% year over year. And this is obviously going back to July. They haven't really released the numbers for August. But do you think this is going to change going into August? I don't. How interesting is it to see them? They're roaring back. By July, GTA hasn't reached its 2019 numbers as far as the number of sales. So now, again, this could change. I haven't looked at the numbers for August on that. But to date, we haven't really caught up to the number of transactions or number of sales that we had at this time in 2019. It's just roaring back now. It'll be interesting. We might actually have crossed it this month. But in July, that was already the case for waterfront properties. Waterfront sales totaled for the first 7 months. They were up just under 40% from the same period last year. They have no shortage of sales happening out there. It's crazy. Even the non-waterfront properties are up year over year, just under 4% from the sales they were in the same period last year. Very fascinating, the difference that we see. There is an unlimited amount of people running to the suburbs, running to cottage country, trying to get away. And in the meantime, it's a great opportunity to still generate high cash flow. I have clients right now that are getting over $500 a month. You know, they're putting 20% down and they're getting hundreds of percent cash on cash returns. You can't see that unless you see equity growth in our city. And obviously that's kind of happening, but there's a lot of uncertainty there as well. But if you're going to invest, do it right. Don't be just like somebody just grab some random weed and like on the note of rolling a knee or rolling a joint, right? Don't be just grab some random weed as an investor. Let me help you, or let somebody that's savvy with helping investors help you. Put it this way, guys, it's a joint effort. So dumb. All right, we'll keep moving here. We'll keep just some hot topics before we get into our last and final one, talking about pre-construction and home builders. There's some new designs, apparently they're in the works for Toronto Island. It'll be interesting to see what happens at that park. Here's some of the things that they're looking at. There's 8 main objectives for what they want. They're still kind of in the early planning phase. Obviously, there was flood-related issues, and so they're trying to develop this new master plan. Here's some of the things they're looking at. They want a waterfront park destination that's world-class and accessible and inclusive. They want a model for resilience, environmental excellence, and sustainability. An island of balanced and varied activities celebrating 4 seasons. They want an island with rooms with diverse and memorable experiences. They want to celebrate the Indigenous heritage and culture. They want an island oasis, carefree and protected. I love all the touchy-feely. A park that will serve a unique function for all Torontonians and beyond. An island community and culture centered on balance and respect for the past, present, and future. Well, it's so beautiful. Our city is trying to get in touch with our history and our culture. Just like I got in touch with my inner self today. I'll tell you, that's the last time I used one-ply toilet rolls. I'll tell you, one of these days I'm getting myself in a lot of trouble. All right, here's another hot topic. The Canadian mortgage credit sees growth slow despite record sales. This came out of Better Dwelling, which I think is ironic. The idea here being that the rate of growth is still decelerating. So in other words, people are coming off mortgage deferrals. People aren't applying for them at the same capacity. Does that surprise you? Doesn't surprise me, but we're seeing those work out in the numbers as well. We also have a really funny, interesting article from Better Dwelling, and I love kind of poking at them every now and again, and this is a great place to do it. They have this little article that says the adverse scenario is the worst recession Canada has seen. They're holding on tight, I'll tell you. And they're talking about how the Bank of Canada, they come up with these different scenarios back in 2019. Like, that feels like a decade ago. This idea of what would happen in an adverse reaction to a recession. And let's remember, 2019 didn't even know about COVID yet. They say in the worst case scenario, we would have seen a price correction of 40%. And then they go on to talk about how every other factor that should line up with this recession is happening. GDP has dropped 8.2% annualized, which would match the 8.2 they say in their scenario. Employment has peaked at 13.7 in May, pushing over even higher than their target. Unemployment was 5.5% in January, which is an increase of 8.2% trough to peak, and adding the situation is, quote, exceeding the worst case scenario. So the adverse or worst case scenario we had in 2019 from the Bank of Canada, we have met all of their criteria, except real estate prices did not fall. Real estate prices didn't come down, right? And they're saying now that most risk firms don't expect real estate prices to fall until the end of year or well into the new year, as the banking system returns to normal and mortgage deferrals begin to expire. Well, if that isn't a moving target, I don't know what is. Because I am also comfortable saying that the things that I was tracking that should happen in the fall, we're talking, unemployment, mortgage deferrals coming up, evictions happening, all of these things that we've been mapping that I said we need to be careful as we round into Q4. We can't just keep pushing this back and say, oh, it's going to happen later. Oh, it's going to happen later. We can't live in that culture. The truth is, unless we get another COVID wave, we have had a reopening and things are doing fine. In fact, they're on a tear, right? And people are just expecting us to collapse. But instead, they see me rolling. Don't hate on the investors that got in early, guys. Don't hate. Recognize that a lot of the risks, I believe, are now behind us. Let's not just keep pushing this thing forward. But again, if you actually want a counterpoint to all of this, because you know me, I like to give all angles here. I don't want, and this is a way of me protecting my own self by making sure you know. We just had an interview with Daniel Kwok. Go check that out. I posted that yesterday. He's talking about the U.S. housing market, and the fear that they have coming out of their market is tremendous. So that's not to say we won't have some kind of economic issue. The point is, it's not coming from Canada. It's not coming here locally. In fact, our immigration numbers are down. These things will at some point come back up again. Obviously, CERB's ending. I know there's a million things going on, but if we can't see these things rolling out through Q4, why are we now saying it's going to happen mid next year? I don't know. I don't like this idea of a moving target. It drives me crazy. If you're wrong, you're wrong, and just accept it. All right, let's jump into new home sales. All right, let's do it. There's an article came out of Toronto Stories. Great headline. Sales of new family homes in GTA up 187% from July 2019. Again, these numbers are from July. We don't have August. This is only 3 days in, guys. Relax. These numbers will happen for this month, for August. We're still looking at July, but it's still very much applicable as we look at what is happening for the new builds. Well, according to the market intelligence from Altus Group on behalf of Build's their official partner, new home sales in July were up 36% from the same time last year and 40% above the 10-year average. What I love about this is they actually break it down even further. They say new single-family homes continue to make strong gains, and they're a whopping 187% increase in single-family homes, which is detached, linked, semi, and townhomes compared to the same month last year. And compared to the 10-year moving average, they are up 78% last month. But this is what interests me, this idea of the condos, right? The condos in the new build segment. Look at some of these numbers. So including units in low, medium, and high-rise buildings, stacked townhomes, and loft units, right? They picked up in July after 3 months of slower activity. Condominium apartment sales were 4% below July 2019, but 10% above the 10-year average. So we're still a little bit below where they were this time last year. But again, they're saying the numbers are picking up from 3 months of slower activity in the condo space. Is this a leading indicator of condos to go on the upswing on the other side? Maybe, but listen to this stat. What's more, the benchmark price for new condo apartments sold in July was up 18.5% over the last 12 months. Guys, benchmark prices, meaning by the type of home, is up just under 20%. 20%. And then when we look at the single family homes, they're up 8.3%. It's backwards. Really, that is almost exactly backwards with how the stats should look. Why is it that people are paying such a high amount for condos right now? I don't understand. Maybe it's a light shining on what's to come in the future, or maybe builders are overpricing their condos, right? Maybe. And that it might be because they've already sold these high-end condo units, and it'll be very interesting. It's also why I don't think assignment sales are going to really come through all that much on the, you almost better to have them close then if that's the case and buy it on the resale market when they realize the home isn't nearly worth what they paid for it. It only seemed to be that way because the builder was overpricing the new condos coming in behind them. Anyways, these are some of the things that I'm watching right now. I'm sorry that today was a full day. I know it was, and it's because I missed the last couple of days. I do it to myself, and I pay for it in prepping for these podcasts. I hope you guys are getting a lot of value. Thank you again for your comments. For those of you who have messaged me with questions and just kind of asking things, I will get back to you. I'm really busy, and I do my best, but I will get a hold of you and touch base. But that's it. So we're going to leave it here. I'm going to leave you with one more joke. We're going to lighten the mood a little bit. Okay, here we go. Why did the snail paint a big S, the letter S, on his car? Because he wanted people to look at that S car go when he rolled by. I apologize for my bad jokes. Sometimes they're not that good. They're like circles. They're pointless. But that's just how we roll. I'll see you next time. Take care and keep it real.